Hey everyone, welcome to my channel. Today we're going to tear down the Qqq'S and explain why I think it's such a vital part of most anyone's investment portfolio, in my opinion. Why are the triple Qs unstoppable? Which individual stocks am I trading? How am I trading these individual stocks? All that and more, but first, hang on. The main reason the triple Qs are unstoppable is because they contain the companies that are going to propel artificial intelligence. About 70% of the QQQ, to my estimation, is technology. They say 57% of it is pure technology, okay? In consumer discretionary, they're including Tesla and Amazon, which in my mind, and just about everybody else's mind, I think is technology. And they're saying consumer discretionary is a little over 18%. So I'm taking some from consumer discretionary and put it into technology and saying about 70% of it is pure technology. The wonderful thing about this actually, though, is that you actually have diversification. About 7% of it is healthcare. Another little over 5% is telecommunications. It has industrials, and nobody thinks of industrials. It has industrials like Old Dominion Freight. Who thinks of that? With healthcare, it has Amgen, which is the major biotechnology stock in my mind. Consumer staples, it has like Walgreens in it. It has utilities. It even has 4 energy companies. And then it has real estate. Who would expect that? And then there's basic materials. I believe the triple Q is the investment of our times. If you're in a situation where you can't watch the stock market all the time, but you want the dollar cost average or try to get in at the most opportune times, you can gradually build up your money in QQQ. I think you'll have a good outcome over the years. If you've got like a decade or more ahead of you, it's almost a sure thing in my mind. Now, to be 70% technology, I think is about right. Who doesn't believe that technology is going to be the overwhelming sector affecting our lives for the next century or more? And looking at the chart, you can see that QQQ has made 46% year to date, and in the last month, it's made over 8%. This has truly been a November to remember. Its relative strength is 69, which I like. I always like to see a good relative strength. To me, that indicates that the market is in a bullish mood, and the market can stay in a bullish mood for a while or even a long time if the mood is right and we don't have horrible events happening everywhere. And if you're seriously deranged or very short-term focused like me at times, you might want to trade the T triple Q, where you get $3 for every dollar the QQQ goes up. So it's a very bullish fund. It's very volatile. You can make lots of money. You can also lose lots of money. So you got to be careful with these. These are short-term focus. I feel like you have to be on it every minute. You don't want to take your eyes off it too much because it is very jumpy. The TQQQ has made 25% in the last month, and in the year to date, it's made about 155%. Now, the FNGU is the Magnificent Seven stocks plus Snowflake, Netflix, and Broadcom. And it does even wilder. In the last month, FNGU has made 30%, and year to date, it's made 369%. Can we give it 2 thumbs up? And while you're at it, why don't you give me a thumb up if this has helped at all? Let's hold our breath when we trade these. In my mind, they're for day trading only. Going long term with these is deciding to hold it overnight, which is always a thrill because anything can happen overnight. You can always have those black swan events, which we mostly want to avoid, right? I did sell NVDA, and the reason why is because it never got going after earnings. In fact, it came down after earnings. And I think what happened is that the positive earnings news was already priced into the stock. It went above 500 prior to the earnings coming out, and I think it would have gone above 500 if it hadn't gone above 500 before the earnings. I think it was already priced in, and then we got news that China is delaying purchase of their chip until the first quarter of 2024. So on Friday, that brought the price below 480, and I had a stop loss at 480. For me, that settles it for now. I'll get back into it if it shows decided movement back towards $500. You know, if it comes back to 490 or close to 490, I'll get back in. But what I sort of expect to happen, I think it's nonsense that it went down, frankly. But I think the stock market specializes in nonsense, and the nonsense could drag it down to 450, at which point I think it's a heck of a buy. And then I will buy. I think it'll resume its march towards 500, because I think it should be over 500 with the excellent results that they provided. I also sold Super Microcomputer, but it tends to move with NVIDIA, and it's because Super Microcomputer provides servers for artificial intelligence purposes. They're both leaders in artificial intelligence. SMCI tends to follow NVIDIA. So I sell and buy them at about the same time, and I plan to follow a similar strategy in the future. I am keeping Rolls-Royce as it hangs in there, and that's all I ask of a stock that I'm trying to swing trade with for right now. So is the Santa Claus rally going to continue? I think it is. I think the stock market's going to slowly keep grinding higher. I don't see how it can help but do it. And it's mainly because the volatility has come down so much. They call it the fear gauge. The volatility tends to be worse when the market is in a bear market. And this volatility, the VIX, is down in the 12s, which is very low. Anytime you're below 15, you're in a raging bull market for all intents and purposes. And also, the mood of the market, it's greedy, but it's not extreme greed, and the market can stay greedy for a long time before it turns down. And also, we have $5.7 trillion in money markets, and I think that's going to come in to affect the market. Now, the big thing will be what happens with inflation. We have PCE coming up next week, and that could affect things. But the sense is that, the price of oil has come down to a degree. It's in the 70s, never more than the low 80s. I think we're getting some relief on the inflation front. I think coming down from 3% to 2% will be hard. And so I don't expect interest rates to go down for probably the next year or so, simply because they're going to get inflation down by keeping it on longer, keeping the rates higher for longer, rather than raising the rates, which frankly at this point is dangerous. Thanks for listening and watching. Be sure to check back. Thank you.
Inside of me, you better watch out. If your enemy's a road ahead of full prophecy to be the greatest beast the world has ever seen. I feed him every day like the bones clean. I feed him all the hate and he grows mean. He gets claws real big, pissed off quick, and if you cross him you might drop dead. Metaphorically, of course, settling this war, never getting bored, loves the blood and gore.